Hi there. Welcome to our weekly stock market review, where we look at the Kenyan stock market, how the different shares did perform the previous week, and most importantly, utilize that information and another fundamental to try and make sense of how the stock market is going to most likely perform sector by sector the coming week and even weeks later. You are all much welcomed. My name is Afagza Sifunam. The summary of the market last week is the market did improve by 45 basis points as of close of market on Friday. That's the NSE 20 share index. Then secondly, the blue chip stocks continued to support the market because they're the ones which really carried the market on the positive side. And then the third thing is that investor sentiment remains positive. Then, this being a dividend season, the dividend season continues to attract long-term investors. And then lastly, liquidity remains concentrated in the large cap counters. Even though, of course, we know some of the sectors, like for example, manufacturing, really had a strain when it comes to liquidity, right? Having said that, how did the NSE perform sector by sector? When we start with agriculture, the agriculture sector had another positive week, with nearly every listed company posting gains except Limuru Tea, which remained unchanged due to zero volatility. The strongest performers in the agriculture sector were Williamson Tea, which gained by 2.16%. Sasini did gain by 1.87%, and Kapchorua Tea did gain by 1.75%, by 72%. Williamson Tea continues attracting investors after returning to profitability, because the most recent profit, it did post a 120.8 million net profit, and also it did announce a generous dividend of 15 shilling per share, therefore enticing more investors. And this dividend is payable September of this year. And then Kapchorua Tea also benefited from its recent announcement of 30 shillings dividend per share, while Sasini gained as investors positioned themselves ahead of the interim earnings and improving global agricultural commodity prices, because also globally, the prices of agricultural commodities are currently improving. And then when you look at automobile, the automobile sector remained positive. The only listed firm under automobile is Car and General. And Car and General did gain by 2.99% during the week. And the stock continues riding strong long-term momentum after rising more than 400% the past year. Yes, guys, the stock of Car and General has increased by 416% over the past 52 weeks. And this is supported by, first and foremost, the strong motorcycle sales. Remember, Car and General does have sales across different areas: vehicles, motorcycles, general equipment, you name it. And then secondly, also it had a healthy earnings. And then third thing, that it attracted dividend payments. And lastly, long-term investors' confidence was bolstered because of these dynamics. And of course, now we expect also these to continue into the coming few weeks, despite some of the nuances in the Finance Act also touching on automobile a bit. We expect it to continue performing well. And then the third sector is banking sector. Banking remained one of the strongest sectors at the NSE. And we're talking about all the banks really registering a positive gain in the course of the week, except Stanbic, which did just decline marginally, and National Bank, which didn't record any trade because the trade volumes were zero. Other than these two, all the banks did have a gain in the course of the week. And top performers were, according to Friday's number, were Stanbic Holdings, which did gain by 1.55%. And then Co-operative Bank did gain by 1.44%. And the banking rally continues to be driven by several factors. Among them, the strong dividend yields. Remember, the banking sector companies are among the companies in the market which do pay high percentage of dividend yields. And that is evident. You know, some banks, like for example, even the NCBAs, KCB, you name it, these had dividend yields upwards of 9%, thereabout, okay? Some, like for example, Stanbic, had dividend yields even upwards of 10%, you know, Standard 14%, quite some crazy percentage yields when it comes to dividend. Therefore, they really continue ramping up the number. And of course, also the banking sector had healthy liquidity. Remember, they do handle cash each and every day, so they have healthy liquidity. They had robust earnings, and also now there's also very high earnings expectations, because banking firms from Kenya are among the highest grossing companies in the entire region, Eastern Central Africa, when it comes to their annual earnings. And then lastly, there is continued institutional demand for quality banking stocks. Remember, these foreign investors are also looking for those kind of stocks which have the characteristics of banking stocks. They are having volatility in the market and also dividends potential. And then the next sector is commercial and services. This sector continues struggling, honestly, because almost all the companies under commercial and services, despite there being more than 10 companies, did decline. It is only Nation Media and Scan Group which did have a marginal increase in the course of the week. And as of Friday, the best performers were two companies, Scan Group, which did gain by 1.42%, and Samia Africa did gain by 1.27% on Friday specifically. Meanwhile, some of the companies in that sector, for example, even Homeboys Entertainment, were inactive throughout the week because the trade volumes were zero. Scan Group specifically gain appears to be driven by bargain hunting after stock lost roughly 16% over the past year and continues to trade below its 52-week high. Therefore, there's a perception of undervalue on this particular stock. Therefore, there's bargain hunting going on. That's why the number of Scan Group did increase or appreciate. And then when we move to the next sector, which is construction. Construction remains one of the weakest sectors at the NSE. And this so because 60% of the listed companies under construction recorded zero trading activity in the course of the week. Yes, 60% of the companies had zero trading volumes. And among the active stocks which are only there are only two stocks, which were Crown Paints, or previously called Crown Bergam, and East Africa Portland Cement. Of course, both of them declined, but worth noting that East Africa Portland Cement on Friday specifically did decline by 4%, despite recording a small gain over the full week. The sector continues facing some of the key challenges which have been there for some time. First and foremost, there's high operating costs. Second, there's weak investors' confidence. And third, limited liquidity in this sector. It is worth noting that although East Africa Portland Cement continues benefiting from restructuring under the Armstrong Group, which closed last year when Tanzania's Armstrong Group took over East Africa Portland Cement, investor participation remains subdued. And we hope this maybe may change in the coming weeks. But this sector, as things look, most likely is going to continue struggling. And then the next sector is energy sector. Guys, energy and petroleum delivered one of the strongest performances this week at the NSE. You know, and we're saying so because almost actually all the companies appreciated except Kenya Pipeline, which did decline a little bit, 0.0 something percent decline. But the rest of the companies there, Kengen, Kenya Power, Umeme, Total Energies, all those saw their shares appreciate. And top performers were two companies. Kenya Power did appreciate by 2.13% on its stock, and then Total Energies did appreciate by 1.38% on its stock. Kenya Power specifically continues benefiting from three key enablers. First, the strong earnings. Remember, Kenya Power came to profitability in the most recent earnings. Secondly, improving investors' confidence. That, because of the sector dynamics and also its earnings, there's improved stakeholders or investors' confidence. Then third, that positive momentum in the sector is really driving Kenya Power shares up and up. Meanwhile, Total Energies had unique factors which did make its stock to rise. First and foremost, there's the Brent crude oil prices increased globally, okay? And then secondly, investors' anticipation of the upcoming 3 shillings 45 cents dividend, which Total Energies is going to be paying. These two factors did cause Total Energies share appreciation. Then we move to the next sector, insurance sector. Insurance had an excellent week, okay? And this so because the biggest gainers were Britam. Britam stock did gain by 9.55%. That's quite huge for a 1 week gain, okay? And then CIC did gain by 2.47%. And then Sanlam did gain by 1.18%. Britam specifically stood out because of a few factors which are worth mentioning. First and foremost, there's the balance sheet restructuring, which happened earlier in the year, basically allowing Britam to be able to neutralize some of the losses and then pave way for the possibility of paying dividends in future. That balance sheet restructuring really did help, and we are seeing that in investors' confidence. The second thing that the improved dividend outlook, as I've mentioned, did play a key role. And lastly, which most people out there don't know, is that Britam is the majority shareholder or owner when it comes to the stocks of HF Group. Housing Finance Group, because Britam holds 49% of HF Group stocks. And because HF Group is performing very well, it's been also quite on a crazy rally, whereby earlier in the year, it saw its profit increase by 250%, right? It's getting also to state lending, and it's even improving when it comes to share ownership by top executives, you name it. So because of this growing value of HF Group, also the stock of Britam is, as a ripple effect, continuing to improve and grow also exponentially. And then when we move to the investment sector, this sector particularly remained weak past week. And I'm saying so because most counters experienced either zero trading volume or price declines. It is only Centum which had a modest gain. And I'm saying modest because its gain was 0.69%, which is modest. And of course, for Centum, this marginal gain was because of continued restructuring. As we know, Centum is restructuring, portfolio deleveraging, trying to see how to reduce the debts while also selling off some of its assets to trigger cash flows and possibly even get capital. And these dynamics are causing investors to have slight improved confidence in the stock of Centum. But this sector widely is continuing to be weak at the NSE, right? And then the next sector is investment services. This is less self-listing by the NSE stock, and of course it did gain by 0.42%, a reflection of the broad market dynamics, not really an NSE kind of like intrinsic dynamic, okay? That's why it gained by 0.42%. And then the next sector is manufacturing sector. Manufacturing posted mixed results. We know the companies and manufacturing are very broad, manufacturing different things, right? Ranging from the corrugated packaging material to alcohol to even household consumables, you name it. And the top gainers were the Sri Krishna Overseas, which gained 2.79%, and Afrimega Corp, which did gain 1.13%. Sri Krishna Overseas is an interesting company. Remember, it was listed at the NSE last year under the MSMEs section, the first listing ever, of course, under manufacturing. And it did gain by 2.79%, signaling investors' confidence in this particular stock, despite even the challenges it's having around its kind of like liquidities, you name it. But then again, the main thing driving Sri Krishna's overseas stock up is because of its construction of the plant at Kisaju in Kajiado. Remember, Sri Krishna Limited is one of the biggest companies making corrugated packaging materials in the country. Simply put, all these boxes which you are using, which companies are using to package commodities, a number of them is coming from Sri Krishna Overseas Limited, and currently its annual capacity is 3,000 tons. With a new plant in Kisaju Kajiado, once it's complete, is estimated it's going to increase its production capacity by 7-fold to even hit 22,000 tons annually. That is going to be a game changer when it comes to it producing locally for local market and also regional market. And that's why there's investors' confidence on this particular stock. And then, of course, the Afrimega stock, it was more of a recovery for the week, honestly. Because earlier in the week, it really did dip a lot. And then close of the week, it did gain by 1.13%. And remember, earlier in the week, it did dip because of the dynamics around last month. The Afrimega Corp did change its leadership, so it has an acting MD. And remember, the market doesn't like uncertainty. It punishes uncertainty, so the stock has been fluctuating too. Okay? And then the next sector is telecommunication. And the telecommunication will have Safaricom. And Safaricom stock did gain by 0.28%. Although a modest gain, it reflects continued investors' confidence in the stock of Safaricom, stable business fundamentals, because as we all know, Safaricom is the most profitable company in East and Central Africa and continues doing well across its offers. Mobile money, you know, we talk about M-Pesa, calls, voice, business enterprise solutions is doing very well. And then also there's anticipation of upcoming dividend payments, which are supposed to happen the first week of August this year. So all these factors are played into the stock of Safaricom, gaining marginally in the past week. And then the next sector is real estate sector. And the real estate sector, we have two REITs listed. Interestingly, there was no price movement on these REITs, and this was because the REITs remain inactive. Most of these REITs are closed, ended, kind of like business or trading. In case the companies behind it are not trading, chances are they're going to continue remaining zero, and it's remained zero week in, week out at the NSE in most recent weeks. And then the next sector is ETFs. ETFs did post mixed results because The new gold ETF did decline by 0.71%, reflecting the decline in the price of spot price of gold globally. Because when the spot price of gold globally decline, it causes the dollar pressure to increase. And as a result, also at the NSE, this ETF is going to see its price decline, right? That's why we're seeing the share price depreciation of the new gold ETF. And then the second ETF is the Satrix World Equity Tracker, which did improve by 2.49%. And this reflects investors' view on this Satrix Equity Tracker too, because the underlying equities did marginally improve too. And as a result, the ETF tied to this particular equities also did increase by 2.49%. Guys, that is how last week the NSE performed across different stocks and also different sectors. So what do we expect this week of 20th July and also possibly in the coming weeks? First and foremost, I expect continued rotation into banking and insurance stocks because these sectors have performed well week in, week out. So I expect continued rotation into this sector, banking and insurance stocks. And then secondly, I expect investors positioning ahead of interim financial results, right? So investors are going to be positioning either some capital movement across sectors, which we're going to see happening in the coming weeks. Then third, we're bound to see dividend-driven buying in blue-chip companies. Remember, when companies are paying dividends and closing their books, also investors out there are changing their investment positions based on dividend dynamics. And then the fourth thing is that they're going to be possible profit-taking after several consecutive weeks of gains, right? So you're bound to see some investors cash out their money really after weeks of gains across different stocks. And then lastly, foreign investors' activity in large cap counters is going to continue for counters such as, for example, Safaricom, Equity Bank, KCB, Co-operative Bank, Stanbic Holdings, which are basically large cap counters. And this so because, as I mentioned, investors really like these large cap counters and liquid companies because of volatility in the market, and secondly, the possibility of them also enjoying the dividends. Guys, what do you make of last week's performance at the NSE? How do you think NSE is going to perform coming week and even as we continue moving towards August? Comment down below. Let's continue discussing. Cheers, guys.